quickie solo episode today. I want to talk to you about finance and specifically what a finance director does. Now, if you're listening to this episode and you're thinking, well, I'm only on a few £1,000s a month at the moment, Sam, there's just me and I'm doing everything, so I don't really need a finance director. I would absolutely agree with you. You don't, but you do need the finance director role to be done by you. So what should you be doing on maybe a daily, weekly, monthly, quarterly, annual basis? So we'll go through that. I've also looked at if you're doing 25k a month, which is 300k a year, what are the functions there that a finance director or you would need to take on? And then finally, at a £1 million a year agency, which is where Ashdown Jones, our agency, is, the functions of our finance director. We don't have a finance director, but we have a group operations manager, and it's the functions that he takes on. And then beyond that, the reason that this is on my mind at the moment is because Edward, who's our ops manager, and I have been talking about if we did get a fractional director, finance director, and I'll explain to you what that means, what the role of that finance director is. Because at the moment, Edward and I jointly share that role. And of course, when anybody shares a role, you get gaps and overlaps, don't you? So let's just go through those kind of 4 scaling levels of financial control, let's call it, and see exactly where this fits you and what functions you are and aren't doing. So the main functions, no matter what size your business is, even if you're only turning over 1 or maybe 2 instructions a month, you still need to have financial control, don't you? So you need financial planning, which means looking forward to see what your business is going to be generating and what it should generate, could generate, and is generating in the future. Budgeting, which means ring fencing or capping any particular areas of spend in your business. Cash flow management, how much money have we got in the bank today? How much money will we have in the next 3, 6, 12 months? And whether there are any holes in that cash flow. Monthly management accounts. This is really what's the ins and outs, literally, of that month. What's gone out of the bank account, what's come in the bank account, and looking at things like expense controls. VAT and tax compliance. So are you saving your VAT separately? What have you done to make sure that you've got enough tax to pay at the end of the year? And I'll tell you where we are with that as well. Payroll. If you've got anybody that gets paid, including you, if you are on PAYE, if you're a limited company, you've chosen to go that route, how you manage your own payroll, or drawings if you don't have a payroll. Cost control and supplier negotiation, so exactly what you're paying for everything and whether you're getting the optimum service / payment terms for that thing that you're buying. KPI tracking and reporting. We've covered this quite a lot on the pod, so I won't go into a huge amount of detail, but things like scorecard, CEO dashboard, those kind of things that we've talked about before. Strategic financial advice, and this is advice that you seek from other people about your business so that you can make sure you make the right decisions. And as well as that is financial reporting. So who is giving you the information and how you're interpreting it, what you're doing with that information. Then you've got things like investment planning, funding planning, which isn't necessarily important at the early stages, but it will become important. And then maybe the tech you're using to actually manage your finances. So how you're accessing your financial information and what you're doing to make sure that everything's up to date. So let's just go through by size what a finance director role needs to be, starting with the 100k a year, which is about 8k a month, isn't it? So this is probably your first 1 to 2 years in agency where maybe you're selling 20 houses at 5k each. This will be where you need to focus your attentions. So for financial planning and budgeting, you need to set simple budgets. And a budget could be as simple as deciding how much it's going to cost you to take a property to market and make sure you ring fence that. So if you break that down, you might say, well, you found an amazing photographer, but he wants to charge you £600 a shoot. That isn't in the budget. So what you're going to do, you're going to find a different photographer, or you're going to use that photographer for less time. And that's what we mean by a budget. So we budget for each shoot. It's about £350 for our main photographer, and then we've got another £200 in the budget for drone and twilight. And so you can see we've got quite a healthy budget of £550 per property, and that contributes to the overall budget of £1,200 per property to take a property to market. We can always choose when we're going to blow the budget, and also sometimes we have to spend less money on that. Maybe we don't get a brochure printed. Very occasionally we don't actually print a brochure for a property, and that saves us another, let's say, £250 for the printing. But what we're talking about here is 80-20. 80% of the time we spend £1,200 to take a property to market, and therefore we know if in our target for 2026 is taking 100 properties to market, we know we're going to have to ring fence 100 properties times £1,200 for that budget. And that's what we mean by setting a budget. And that just means that it doesn't become an exponential cost that runs out of control. Financial planning is something you should be doing regularly, and that's just making sure that you've got a handle on all the bits of information you need to make the right financial decisions. So have you got information about what's already come into the bank, what you've got in the bank now, and what's expected to come out of the bank, which is all the other elements we talked about before, things like cash flow management, which is next. So we have a cash flow forecast. If you'd like to get your hands on a copy of our blank one, it's sam@ajmastermind.co.uk. Put cash flow in the subject and I'll pop it straight over to you. And it's a really simple Google Doc that we've got a blank version that you can use, and it pre-populates all the information that you need to put formulas in so that you can see what is going to be in your bank in 12 months' time. Unlike most businesses, we don't put forward sales into the forecast unless it's already a sale agreed. So if you had, I don't know, a wool shop, and you knew that every July you sold £1,000 worth of wool, then you could put £1,000 worth of sales in as your forecast for July. We don't do that. We said, what have we already sold? So what balls of wool have we already pre-sold that we're hoping we'll get paid for in July? So it's very different in our industry. I would only put in your cash flow forecast actual properties, not a guesstimated number in 6 months' time that you think may or may not complete at that time. So in the list of properties in your cash flow forecast, they should all be actual properties. And very simply, we put it in italics if it's not exchanged, and we put it in bold text if it has exchanged, and then the date it will complete. If we've got a big property, we very rarely put that in the cash flow forecast. We sold last year a 10 million. That was going to be a £150,000 fee. We wouldn't have put that in the cash flow forecast because it skews everything. Because obviously if that had fallen out of bed, then every single figure for the whole year is skewed. Where if a £7,000 one falls out of bed, then it's not going to impact that much. Moving on to monthly management accounts. So basic P&L and cash flow summaries. I wouldn't even probably put a cash flow summary in. I don't think you need that. But basic P&L month by month, I think, is a sensible thing to do. VAT and tax. This is just to make sure that you've got enough on one side. So we've talked in this pod before about a system called Profit First. And this is by a guy called Mike Michalowicz. And if you can't spell that, and I don't think I could, go to Mike Motorbike. That's the URL he has managed to secure, and that diverts then to Mike Michalowicz. And he talks about his system, which is a system, a website, a podcast, a book, and lots of resources and probably some courses as well, called Profit First. And in that, very simply, he says, it's like the envelope system. You need to put in your envelopes or your business bank accounts money for different things. You've got an operating account, so OPEX account. You've got your VAT and corp tax account, and you've got a profit account, which is where you can take your drawings from, whatever system you want to run. But the most important part of this is that the money that's not yours, which is your VAT and tax, gets ring-fenced as it comes in. Not in a panic every quarter or even every year, but as it comes in. So what we do when, let's say we sell a property with a £10,000 fee plus VAT, so the £200 we would take off, £2,000 we would take off that income straight away. £10,000 goes into our main OPEX account, and then £2,000 gets transferred immediately into our VAT account. Now, you might say, yes, but the differential between what you need to, what you claim versus what you have taken in VAT can be 6%, which is about right. So 14% will be the amount that you eventually pay net in VAT, because you're going to be claiming back about 6% in expenses, which is of course true. But that 6% we put in anyway, because that pays for our corp tax at the end of our year. So last year's corp tax, I think, was £60,000 for us, which was a really big chunk of money, but we had it saved in our VAT account. This year we're looking to mitigate that even further, and I'll come on to that when we talk about financial directorship at £1 million plus. Payroll, I think at the very early stages, if you do have anybody on payroll, you're probably going to be paying that yourself. And my advice is as well, at the very, very early stages, make that person freelance. So don't have them where they are fully, a full-time position with you, unless you can definitely afford it. I think at first, somebody 10 till 2, 3, 4 days a week, paid on a freelance basis is probably more sensible. And then you don't have to go through the costs and the implications of putting them on PAYE with a payroll. As you get bigger, that payroll can be handled by a bookkeeper, or like we do, like our accountant. It's very cheap. I think it's something like, it's about £10, I think, per person per month to pay payroll. And that generates all the necessary paperwork that goes with payroll, including digital payslips. Cost control and supply negotiation, you should be doing this on an ongoing basis, but it's a really good idea at least once a year just to sit down and look at all your costs coming out your bank account and just think, do I really need that thing? How much am I paying for? And we've actually just done a print quote just yesterday for a postcard send out we're going to do. And the quotes range from £1,500 to £570 for exactly the same thing. So just think about all your expenses, either ongoing or ad hoc, and just think, could I get that at a better price? And just really interrogate those costs at least once a year. KPI tracking and reporting, as I say, scorecard, CEO dashboard, financial control dashboard, whatever you are keeping, make sure those KPIs, which is key performance indicators, are on the wall somewhere where you can track it. So our KPIs are things like letters sent, valuations, because obviously there's a direct correlation there. If we stop sending letters, our vals would drop from probably 8 a week to 4 a week straight away. And we've been open 8 years. We're very well established, very well known, lots of boards, but we still get about half of all our inquiries from letters. So we cannot afford to drop the letters. So we have a KPI of sending out 5,000 letters every quarter, and we always hit it. So that's our main KPI. From that becomes valuations, then instructions, and then we have a KPI of listed fees. So how much listed fees have we got on the market at the moment, and what's our pipeline? There's several more as well, but they're really the main KPIs. So that's the tracking and reporting. Strategic financial input. This is where you're getting your information from. So we use QuickBooks. There are lots of other accountancy and bookkeeping packages. It's a really simple, cheap one to use. And whatever you do, start with something like that. Don't just use a spreadsheet for tracking expenses. It's really easy to get yourself into a mess on it. So I would go straight away to a bookkeeping package, because it gives you amazing reports as well. And then we've got the techs and the systems, which I talked about. So Xero, QuickBooks, basic cloud accounting. And then we've got reporting. So who's reporting? At the moment, it'll just be you reporting to yourself. But what are you reporting on? If somebody was doing that job for you, what do you need to see? So I like to see cash in bank. I like to see money banked so far this year, this quarter, and whether we're on track or not. And then I'd like to see what's in the VAT account and the VAT and Corp account, what we owe on the VAT and Corp account, and just gives me kind of a sense check, a financial temperature of the company. So each of those, Edward reports to me, and then he red, amber, greens them on each one according to what we've already set out. So if I think, for example, that we should have at least 2 months running costs in the bank, that's probably more like £60,000 at any one time, and I'm going to red, amber, green it. Now, if it goes over £100,000, then that would be a red, because really we need to be taking out that 40k and investing it somehow. If it goes under 60,000, it might go into amber, and if it goes under, say, 30,000, it might go into red. Now, at £100,000 a year, those figures might be a zero off that for you. So you might feel that you want £6,000 in the bank at any one time, which maybe is 2 to 3 months running costs. And then if it drops below 3,000, it would be red. And if it goes over 8,000, maybe you want to do something else with that money. Okay, so let's go to a £300,000 agency. This is a year, so this is 25k a month. So when it comes to financial planning and budgeting, this is detailed budgeting at this point. So you're going to be budgeting by department. So maintenance, delivery and growth. Maintenance, all your back office costs, delivery, cost of taking property to market and selling it. And then growth, things like letters and any of the marketing you're doing. Cash flow management, you're doing exactly the same. That doesn't change, I don't think, no matter what. We still use a Google Sheet and we are still tracking it on a daily basis. Monthly management accounts might get a little bit more complicated. Maybe you're going to be using a system or a service to be able to do this for you. VAT and tax is exactly the same. We've got cost control and supply negotiation. I would probably move that to every 6 months at that point when you're on 300k a year. And then KPI tracking and reporting, exactly the same. Strategic financial input, where you're getting the information from, might start becoming an expert by that time. So it might be an accountant as opposed to you just pulling that information off cloud accounting or a bookkeeper. Then you've got your text and your systems. So hopefully you're using Xero or QuickBooks. If you're not, then this is when you definitely need to move to cloud accounting and reporting. And then your reporting is basically your CEO dashboard again, but maybe somebody else at that point is doing that for you. Now, at that point, you might think, well, I do need to give somebody access to my bank account, so I'm not just doing all this myself. And you need to be thinking about who that person could be. If it's a family member, so a spouse, or maybe a business partner, you need to think about how that access to your bank account is going to affect the dynamics between you. So Edward, our ops manager, has full access to our bank account. Of course, that comes with a level of trust. It also has to come with a level of maturity from him, because if he's going to know all the payrolls in the company, then he's probably going to have an opinion about it. So what we're looking for is professional maturity to be able to deal with a situation where maybe he doesn't agree with one of those salaries and maybe it affects how he feels about his own salary. So you have to have all those conversations in advance and, of course, recruit and train the right person to make sure that they do have the financial and the professional maturity to deal with that conflict in their own minds. So now we're on £1 million a year agency, which is where we are with Ashdown Jones. We're hoping to bank £1 million by the end of this year. In fact, we have a leaderboard in our office that shows, or a tracking board, I should say, it shows exactly where we're up to. And if we do get to £1 million banked by the 31st of December at 5 o'clock, then we're going to take the whole team to New York for 4 or 5 days next year. At the moment, we're slightly under track for that, but we wouldn't know that if we weren't financially reporting. So I think we're on 46% or 44% of that. And we need to be better than that because I'm recording this on the 10th of July. So we are over our 6-month halfway mark. We are supposed to have 8 completions this month, but as you know from agency experience, that it could be 8 completions or it could be 0. So there could be another 150,000 landing our bank account this month, or it could completely miss the month and go into August, or even never. And you know what it's like. We'll not know until really very late stages whether that's going to happen or not. But the way we keep track of it is, well, Edward's keeping track of it every single day with the cash flow forecast and checking the bank figure every day. And I used to work for a really big company as a temp. This is going back 20 years now. And they were a multi-million pound company. And they had a PA in our office, or office manager, who was reporting to the owners daily on the bank balance. And that's where really I started to realise that is so important. What is in the bank today? And maybe not even one bank account, maybe several bank accounts. And what you're going to do with that money or with that shortfall if you do have a shortfall. So financial planning and budgeting moves to really secure budgets where you've got a budget per department, as I say, for delivery, maintenance and growth, and that you really start ring fencing those budgets. You also maybe have a budget for financial control as well with rolling forecasts. Cash flow management is exactly the same. I don't think that should change at all. Should be still daily. Monthly management accounts start becoming more sophisticated. So what I've asked Edward to do is put us in a monthly management, monthly financial control meeting, so we can start to use those meetings instead of our weekly meetings where he reports to us. These monthly meetings are about strategic financial planning to make sure that we're being active and not, or rather proactive and not reactive. VAT and tax is exactly the same as it is before. Payroll, as I said, had already moved to an accountancy firm. I don't expect us to change that until we're up to maybe 30 or 40 employees. At the moment, we're on 14. Cost control and supply negotiation, I would move that to quarterly now, away from annually and and half yearly. KPI tracking and reporting, you may start to bring some more KPI tracking and reporting in, like we've got ours now reflecting our investments. So we've got an investment tracker board so we can see where we're up to in terms of the overall value of the portfolio, the equity, the profit, the borrowing, and the monthlies. And so that starts to creep in probably when you're on £1 million a year or more. You should have already started to build a portfolio in that. If you want some help with deciding where to start with that, again, email me, sam@ajmastermind.co.uk, and I'll send you over what we have. Strategic financial advice, this becomes rather than input. So this can be your accountants, or it can be a fractional directorship. And this is where this conversation started today, thinking about if we did have a finance director, what would they be doing? And how do you get a financial director on a fractional? So this might be somebody that's an ex-financial director of a big blue chip company that might give you a day a month on a paid basis. And it's not cheap. We're talking about several hundreds of pounds, if not thousands a month. But in that one day they give you, and they're a non-exec, so they're not in the business at all. They just come for their day and then go again. And they give you very high level financial insight and advice about how to best utilize any surplus cash you've got in the business, what your scaling operations might look like in terms of funding needed, and just really their professional, experienced input into your business. That also ties in with the next line on this chart I'm looking at the moment, which is funding and investment planning. So that's what a financial director should be able to help you with, deciding exactly how you're going to fund and invest in your next project and what your next project should be. Then you've got your techs and your systems, so they might start getting a bit more sophisticated. I can't see us moving away from QuickBooks for the next million or two, but I think after that we might have to look at a bit more of a complex dashboard. We'll be looking to our accountant for some help on that. We're already paying our accountant a lot of money, some would argue too much, and we're supposed to have a certain degree of consultancy in that, and that's not happening. And I think that's down to us not requesting it and not knowing what to request. So that's something we're going to be looking at very closely over the next few months. We don't be wasting money on accountancy services that we're not using. And then finally, I'm going to add into the £1 million agency and above, exit planning and valuation strategy. So how do we make sure that our company is valued at the highest possible level and we're continuing to add to that value? And that might be that if you're a sales-only agency, you start adding in ancillary services. So you've got some passive income, or you've got some separate revenue streams. We talked about this, I think, in the previous podcast where we talked about beyond agency. So beyond the agency revenue, where's the other revenue coming from, if any? Because if you're completely reliant on just your agency revenue, A, you're not building any recurring income into your business. So B, you haven't got a valuation, because your valuation is 70% of your pipeline at best for a sales-only agency. And C, you've got no real certainty of finances when you don't get completion for a couple of months, and that can happen. I talked to an agency only the other day that hadn't had a completion for 3 months, and that can kill most agencies. Most agencies just can't continue running without a completion at least every couple of weeks. So when we talked about the finance director, this fractional director idea of bringing in a finance director maybe one day a month, we talked about things like budgets, which we're not doing effectively at the moment. So we're going to go back to our budgeting planning. We talked about P&L analysis. So rather than just reporting, how do we analyze that P&L? How do we decide what is profit on a month-to-month basis and where we could extract more profit if we could? A balance sheet analysis. We've not even covered that in any of the things we just talked about. So once a year, we get given a balance sheet from our accountants. And how do we know whether that's good or bad? We've got things on our balance sheet that are depreciating. Should we have anything on our balance sheet? Should we have, it should be a high balance sheet. I think that we need professional advice on exactly what a balance sheet should look like and what we should be aiming for, rather than just being reported to us in a very passive way. P&L projection with percentages and milestones. That was Edward's input into this. And I think it's really good insight to think, well, if our profit is this today, what could our profit be in the future? So let's just look at our current P&Ls and previous P&Ls to think, what would a P&L look like this time next year, and would be happy with that P&L. Investment and asset analysis, which goes back to the funding and investment advice and input we talked about in the in your financial control system. And really just thinking about, if we have got any money surplus, where should that money go? It shouldn't just sit on account. We're using something called Flagstone at the moment. And if you want a referral to them, please let me know, because I think we get a little thank you from Flagstone for referring you. But in a nutshell, what they do is they take control of your financial surplus and they place it with the bank that's going to give you the most interest at that time. And then they've got a digitized daily reporting that says whether they need to move that money or not, but they do that all for you. So they set up your bank account, they put the money in the bank account. If that interest rate drops too low, they move to a different account with maybe a different provider. And we're getting a really healthy chunk of interest every month from that for the money that we are not immediately utilising across our property portfolio. How to use our accountants better is something I've put on our agenda for the first monthly financial meeting, because I think we are not using our accountants well at all, and it's an eye-watering amount of money we pay every year to them for actually what is very, very basic accounting. So we need to utilise that much better. We used Armstrong Watson. Again, if you'd like a referral to them, let me know. I think that they are good, but I don't think they're proactive in any way. So we need to make sure that we're asking for the right things from them rather than just assuming that they're going to give us best tax advice. Which brings me on to the last element, which is tax planning. What I want me and Edward to build is a very simple Google Sheet dashboard that shows us what our tax liability is at any one time. Of course, it's going to be estimated, but I never again want to be hit with a tax bill that we are not ready for whatsoever, and mitigate it in advance. And that's what I mean by tax planning. So we're going to put together a very simple Google Sheet. When we've done that, if you'd like a copy of that too, if it works, I will let you know. And you can get hold of that at sam@ajmastermind.co.uk. So that wraps up this little mini solo episode all about financial planning. I'm sure Phil's absolutely gutted to have missed this episode. I'm sure he had a lot to say about it. So I will say goodbye for now, and I will see you on the next episode where hopefully Phil will be available and you won't just have to listen to me. Bye for now.